Public display of the dummy check to signal the takeoff of a 10 billion naira agriculture finance scheme. The financing deal includes Union Bank setting aside 10 billion naira from its balance sheet for lending to viable and bankable agricultural projects. The Nigeria Incentive-Based Risk-Sharing System for Agricultural Lending (NIRSAL) on its part is providing risk guarantees against the backdrop of its $300 million risk-sharing facility.
What we ask a bank to do is to finance a component that has been designed as a model in its own right, self-financing with an entry and exit point for a bank. For example, when you want to support primary producers, that is the farmers, in a clustered, structured way. First of all, we don't present a single farmer to Union Bank. We presented cluster structured groups that are geo-cooperated in such a way that what Union Bank sees is not a request for 200,000 naira per farmer. What they see is a ticket size of 150 million. And then we provide global de-risking for that entire money. That is easier for transaction cost for them, and that would have removed the drudgery of having to locate farmers. We do the locating, we do the structuring, we do the clustering of these farmers and present a single unified ticket to bank to finance.
And this partnership is a beginning. We expect that as it evolves, the more that we see that the outcome of this partnership is positive, the more that we'll be willing and able to expand the size of that partnership. And that what we're looking to do is to boost agricultural productivity with much needed credit lines. So our focus will be on enhancing post-production processing capacity, aggregation and market expansion to curb post-harvest losses and provide market access to smallholder farmers, which itself has been a limiting factor.
Agricultural projects that qualify include primary production, agro-processing, mechanization, input supply, logistics, storage, and selected value chains, among others.
Assuming we're doing mechanization and we're supporting tractors with that 10 billion, 830 brand new tractors would be bought with that 10 billion naira. 3,320 direct jobs will be created. Indirectly, 5 times that size, that is about 1,500,000 indirect jobs will be created on the back of that 10 billion naira. Assuming again we deploy that 10 billion to fertilizer financing, which is really inventory financing, no more, no less. In that respect, up to 67,000 metric tons of fertilizer of various blends can be financed. 170,000 hectares of arable land will be cultivated. 833,340 direct jobs will be created, and 4.166 million lives will be indirectly affected positively.
We commend NIRSAL's effort as it champions the cause for a viable lending scheme for the agri sector, and more importantly, as it introduces a complete value chain consideration in the agriculture lending process and de-risking of the value chains in agriculture financing. I believe that we have the underlying capacity to feed ourselves, and we have to anyway, right? So what we're doing today is part of getting there, creating the ability for us to feed ourselves. In feeding ourselves, we create opportunities for ourselves as well.
How do you increase the contribution of agri to the economy? Provide more funding, financing. A lot of commercial banks, other institutions, they know the potential in that market, in that area, but they all run away. Why? Because again, they've had experiences in the past where their fingers were burned. Yeah. But now, with NIRSAL on board, I think this is a good story for that sector.
NIRSAL is utilizing its project monitoring, reporting and remediation officers nationwide to supervise the projects, thereby ensuring proper use of the loans by beneficiaries. The agency has already developed a system of direct payment to service providers, so loan diversions could be avoided. The credit risks to be provided by NIRSAL range from 30 to 75% of the loan value, depending on the project's dynamics in the agricultural value chain. Lara Folayo, TVC News, Abuja.